Okay, guys, quick one. Today we're going to be looking into a new concept, right? Which is also inside the smart money concept. Okay, so today is day 55, so let's talk about something new. And once you understand this concept, yeah, you would also start seeing something. You'll be able to see them on charts and you'll be overwhelmed, right? Because with the knowledge comes more understanding and comes more clarity of what you can see on the chart. So we'll be talking about the power of three concepts. Sometimes you can see it as people call it PO3, right? PO3, something like this. Okay. So now the power of three concept, it's basically one of the very important uh, concept for understanding how institutions move the market, right? And basically in different trading sessions. Okay, I think we've talked about video where I showed you an indicator to use to identify these various sessions we have. The four sessions that we have: the Sydney session, the Asian session, the London, and the New York session. So you can cut across that video and you would understand those sessions, right? Now the power of three, just like I said, is understanding how institutions move the market, and of course it is really based on the basic of SMC, which is liquidity, right? Now it is basically divided into what these terms. That's why we call it power of three. We have accumulation, right? Accumulation. Yeah. Then we have manipulation. A lot of you will be shouting, market is manipulating, or there's a lot of manipulation. It's part of the game, right? In fact, it's what even makes trading interesting. Yeah, it's what makes trading interesting. And manipulation, then we have the last one, we call it distribution, right? Under distribution, we have expansion, distribution. Yeah, same thing, right? So this is the power of three. AMD, right? Whenever you hear power of three, AMD, it talks about accumulation, manipulation, and distribution. So I'll just explain them so that you understand. I think we might take this as a series because I don't want it to be too long, right? So we might take this session as a series in order to understand it very well, right? No need to panic, just stay cool. Now accumulations, right, basically it just involves the building of liquidity on both sides. When you hear market is accumulating, it just means market is in a state of consolidation or market is ranging. And whenever that means there's no clear trend, either market is not moving, creating highs and higher lows, market is not creating lowers and lower lows, it's just ranging, right, giving you equal lows and equal highs on a particular spot. And this usually happens during a particular session of trading, right? It can happen in New York session, it can happen in Asian session, it can happen in a London session, or it can happen within two sessions, or it can happen within even three or four or all of the sessions, right? So it's just a period of time in the market where price begins to build, begins to range, and gather liquidity, while the manipulation section is that period where market what breaks out of that particular range, but that breakout is manipulated because it does not break out to the intended direction it wants to go. It will give you a fake out. It means if market has accumulated and it is the intended intention of the market makers to go up, to move market to the upside, during the manipulation period, market will sell, right? Market will go to the downside in order to what fake out traders, to deceive traders that, oh, we are going down. Then all of a sudden market manipulates that down movement and returns to the upside, right? That is just the manipulation phase. It's a fake out after gathering liquidity. Then market moves, breaks out of that ranging market, breaks out of that consolidation, and that breakout is usually the wrong direction it wants to go to. It will like break out to the wrong direction to manipulate people that we are buying or we are selling, right? Then market will now reverse and goes to its intended direction. Okay, now the distribution phase, after market has manipulated people to thinking I'm going up or down, the distribution phase will come in and take market aggressively to that intended direction, right? So I want you guys to understand the psychology behind this, right? So all these, you can see them happening on your charts. You, once you identify it, you know that, oh, this is what is happening, then you take time. Now we do not trade when market is accumulating. We do not trade when market is manipulating. We want to catch the distribution. For us to catch a trade with the distribution, so if we see market accumulating, we observe and see the manipulation move, then we wait to catch that distribution, right? These things happen over and over again on the charts. You would not know because you don't know. Okay, you would not know because you don't know. So I'm going to draw a typical standard structure of how it looks like, but of course you know it will not be it not look like that exactly in the chart, right? Now let's start from the first power, which is accumulation. Okay, market is accumulating, meaning market is in a ranging market, right? It's not creating a trend, it is just creating equal highs and equal low, right? Market is what? Accumulating, right? So this is called the accumulation phase. I would use my rectangle tool to just mark it out so that you see that, oh, it's not creating, it's just ranging within the range, right? Ranging. Now once it is done gathering a range, now you know that when market is ranging, market is creating series of what? Equal highs and equal lows, right? Now this is where the SMC concept comes into it. Now you know that there will be lots of liquidity on this side. There will be lots of sell side and buy side liquidity. Buy side liquidity, sell side liquidity will be resting here, right? Now what happens? Market wants to manipulate. If the intended structure, how do you know the correct market direction now is wherever the direction market breaks out first, you want to catch the opposite. What it means, if market now decide to what? Break out from this range and sells, right? It means market might not be intending to go down. You will now need to wait for the manipulation move to play out. And what's the manipulation? Market will sell aggressively to this side, then all of a sudden market will make moves to what? Buy. Now this is the manipulation sector. What did it do? Market was accumulating, then all of a sudden you saw a shift downwards. Now this shift downwards swept all the liquidity resting below, right? Inducing people that, oh, we have broke out, we are going down. Then breakout traders would want to trade off the retest to say, oh, since this was a resistant region, it has since this was a support, it has been broken out, I want to now enter at a retest to short the market down. Then all of a sudden market will make that manipulative move and go up again to what? Take out the liquidity above this resistant region. Now this movement here, this down and up movement, is what we call the manipulation stage, right? So the first is where markets accumulate. Now this movement, right, when market makes a move like this, is called the what? Manipulation stage. Then the distribution now comes in when market makes a pullback into the area of the range and distributes. This is now the what? Distribution phase. So if I want to mark this, let me use colors to do this, maybe to be clear. So accumulation, while this one, let me use this color. This would be the manipulation, and this would be the distribution, right? So you can see, you need to take this down, write it down so that you do not miss it. Now this is where the market wants to make a buy move, but after accumulating and ranging for a long period of time, then all of a sudden, boom, it goes down as if it wants to sell, manipulates people, then booms, moves up, right, then pulls back into the range and buys. So this move is called the distribution, accumulation, manipulation, distribution. Same thing when the market is intending to sell, right? You have that same accumulation phase, right? Market creating that range, okay, something like this, okay. Then all of a sudden you now see the next phase comes in where market what? Manipulates price to the upside. You just see an impulsive move that manipulates price to the upside. Then all of a sudden you can see moves like this can just happen, to pull price back, to sweep the lows, right? Manipulates, then there'll be a pullback, then market distributes to the downside. You can see this happen all over again in charts. This will be the manipulation phase, right? Something like this. Then this will be the distribution. Okay, you can see this repeating all over and all over again on the charts, right? Now liquidity is what fuels the distribution, because market has taken this liquidity below all these lows, then goes ahead, sweeps the liquidity below the high, comes back, makes a pull and distributes. Now you can see this happening. If you want to now spot this very well, it should happen maybe during a session period, right? That's why you should know how to mark sessions, right? Most times Asian sessions can accumulate price, right? You just be seeing price moving in a particular range for 4 hours, 8 hours, 12 hours, moving in that range. Then all of a sudden, when the new session opens, London session will now open and create a manipulative move. Then when London session closes, New York would now come and what? Make a distribution, right? If New York is the one accumulating, you would see Sydney and Asia session will create a manipulative move, then London will distribute, right? We can see that on the charts. Most times you might see 2 or 3 sessions. There's periods of time where you see maybe 2 sessions creating the accumulation, manipulating the price, market will distribute. You can see this pattern happen over and over again, right? So that will be all for today. Tomorrow we are going to go into the charts in order for us to catch price action. So this is the part 1, where I'm just introducing these particular concepts to you guys. And of course, just like I said, you can use it to catch trades. Where do we want to catch trades? We want to catch trades during what? The distribution phase, right? Because that's where we get the aggressive buys and the aggressive sells, right? We don't just enter because market is accumulating. We now say, oh, power of 3 is happening. If we do not see the manipulation move complete, right? Because, for example, market can also do something like this. Market can accumulate, right? Then makes a move to the upside. And if you don't see the manipulation complete, you are now saying, oh, it's power of 3. You might be caught off because this might just be a breakout and a continuation. So what makes it a power of 3 move? When you see the manipulation move complete, you need to see a sweep above and below this region, right? Above and below. Let there be that move. Then you now know that, oh, accumulation and manipulation has occurred. You'll be looking to catch a continuation to the downside for the distribution move, right? On the distribution stage. So you would see accumulation first, manipulation, then you want to catch your trade during what? The distribution, right? So tomorrow in our next video, we are going to be checking out chart examples where we would identify how these moves has been occurring over and over on the charts, and you can see, you will now know how to use them to catch a trade. They are very, very excellent. Whenever you see the move happen, it plays out very, very excellently, right? It does not happen every time, but when you see it, it plays out very, very excellently. So that will be all for today, guys. Thank you for watching.